Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of trading with the Visual JForex, we are going to continue our work with the indicator EMA. In the last session of the trading with Visual JForex, I had explained to you the idea behind the EMA and how we can utilize this interesting indicator to design and develop an algorithm which is likely to have higher probability of finding us profitable trading opportunities. In this session, we will be building on that. We will work with the Visual JForex platform to get a working algorithm ready, which can then be put to use on the JForex platform. So let us now get started for the day. We head to the JForex platform first, JForex 4, the excellent trading platform from the Dukascopy Bank SA. I have added these EMA lines, EMA 24, with each candle period being of 1 hour and the calculation period 24. We are basically looking at the EMA of last one day, 24 hours, the EMA of high and the EMA of the low price have been added to the chart. I had explained to you the rationale behind the idea of initiating the trade. Whenever we see spike in the volatility, and for finding those opportunity, we had put in place this simple condition that there should be enlargement of the EMA price band. The EMA high should be getting higher and the EMA of the low price should be getting lower. That will suggest that the EMA band is expanding. There is pickup in the volatility, and now is the time for us to try to take advantage of that increasing volatility by looking at the direction of the price action along with rise in volatility. The condition for the execution of the trade is going to be simple. We want to get involved in the trading whenever the volatility is spiking, and for that we will rely on this combination of last EMA, last candle period EMA band should be higher than the prior period's EMA band. Along with that, we will also look at the side of the price action. If there is an increase in the price and the last closing candle is above the EMA of the high price, then of course it is better to start looking for buy opportunity. And if the EMA of the low price is there above the last closing candle, that means the price action has shifted to the bearish side, and it is better for us to look for the selling opportunity. We will take these factors into account and then start on the algorithm development. Along with that, to weed out some increased volatilities, initial price moves which can be quite fluctuating. There might be zigzag moment immediately after the volatility spike. So for avoiding that, we can simply put in condition like, instead of looking at the enlargement of the price band immediately, we can take a couple of candle breaks time and initiate the trade after the stability comes in to the price action, and that can be done by simply assigning higher values for the look back period. Now we head to the Visual JForex platform. Here in it, you will find this EMA block here. We are going to need a couple of these. We are going to need 4 of these at the minimum. Prior to that, I'm going to put in place logical blocks as well. I want to ensure that there is only one trade taking place at any point in time. And how do we ensure that? Simply by incorporating the condition that the position amount, all position amount should be equal to 0. Alright, now I'm going to link this. Then we want to ensure that the instrument which we are going to trade with is the instrument of our choice, default instrument, and that should match with our instrument. Now I'm working with Euro USD. On here it comes. Okay, all good. I'm now going to join this to the EMA block, 4 of this. Oh, again, one more. Let us define the calculation parameters. It needs to be of hourly candle period. Change it to hourly here. All 4 of this needs to be of hourly candle period. Change. Alright. Change one more time. And here as well. Then I'm going to look at the look back period here, as we want to avoid immediate spike in the volatility. Look back period of 3 should suffice or more if you feel like. 3, and immediately after that 4. Calculation period is also different, 24, with each candle period at hourly and the calculation period 24. As I said earlier also, is simply whole day's price data. Alright, now we have these EMA visual blocks in place for carrying out the comparison of the EMA. If there is spike or not, we can simply detect it by comparing the prices of the output values of the EMA for 2 different time periods with the look back period of 3 and 4. So far so good. And one info block is going to be needed. Get historical candle. For comparing the price action with the EMA, I'm going to change it to hourly. and the look back period of 1. I think we have put in place the desired visual blocks for the initial conditions to define the initial conditions, and after this the only thing that we need are going to be the series of logical statements which will put in place the conditions for the execution of the trade. And for that I'm going to first get the multiple action block. Here it is, and this will need to be followed by if-else statements. For that, let us add a couple of these. I think one thing remains, which is defining the EMA of applied price. One is going to be of high price, one is going to be of low price. And the low price here. The EMA of the high price should be getting higher, while the EMA of the low price should be getting lower. That is what we need. And for defining that, I think I will have to stop the session here because we are all good to continue. Okay, we will continue and define the conditions. Okay, guys, I will stop for the day here. We will be back tomorrow with and continue the session. Thank you all for joining in. Have a fabulous time.